So let's check in on the U.S. stock market. There are hopes that this violence between Israel and Iran will be contained, even as the two continued their strikes against each other. Let's get more from Liz Miller, president at Summit Place Financial Advisors. Liz, always great to see you. Thank you very much for joining us. So far, the market deciding that this violence in the Middle East will not be that disruptive or won't spread, it seems.
Yes, the market certainly is sort of shrugging off quite a violent weekend. And, I was just looking even at the Israel Exchange Traded Fund, which is up, several percent on the day, certainly reflecting, as you have suggested, that it's viewed that this will be limited, that the response will be limited. We've already seen some of that, but I think it's generally felt that Iran does not have the resources really to combat this. And it's very interesting that, at least as of yet, we're not seeing other Mideast countries coming in to support it either. It seems to even be a conclusion among the Mideast countries that this is a contained fight that they will let play itself out.
The White House and I think I saw the Wall Street Journal both reporting that Iran is eager for talks to try to contain this.
Yes, and remember, we saw some of this, a year ago going on. It seems to simmer, and then we get some activity. So I do think they're eager to end the violent part of it and come back to the table to talk about the next, little scratching at this brick wall of what they can achieve or what they can agree to for the next amount of time and keep things in control there.
Let's turn to the broad market. The consensus is the Fed will stick on interest rates this week. They won't cut.
Yes, we don't expect any surprises there. I think there certainly is a growing chorus from the administration, but also from a lot of professional investors, questioning this strategy. But Chairman Powell has been very clear they're going to be data driven. That means they're looking backwards all the time, not fulfilling their role of looking forwards. But we don't expect any surprises this week.
That's interesting. Do you feel that they should be trying to look forward a bit more, Liz?
I do think it's their job to be projecting what growth will look like, what employment will look like, and what, price stability will look like. That is the mandate. And you could argue they are doing that. But to proclaim for so long we're being data driven means they are looking backwards. So I think they could have for a long time now been more forward looking in their analysis and in their conclusions.
You have some stock ideas for us, including Blackstone, BX, the derivatives and ETF giant.
Blackstone is a huge player in private investments as well. Obviously, a big alternative investor. And what interests me is the stock has clearly had a wonderful run for a long time. But even if we are in for some more difficult times, any pressure from tariffs, higher rates for longer, partly because of their size, they can take advantage of any volatility and any pricing opportunities out there better than most of their peers. So I think that continues to be an opportunity for the company. And then I do think we're starting to see, at least here in the States, a little bit more activity in the new investment in the IPO market. And they too can benefit greatly from that. So they're sort of trading at the high point of their range, but not the highest they've traded. And I do think it's a decent entry point. I
got my Blackstone and my BlackRock mixed up there. I haven't had enough coffee today, but you were too polite to point that out. Private equity, of course, which Blackstone is huge in. Interest rates are important, aren't they? I mean, because it's often leverage deals. I think you touched on that. But if borrowing costs come down, that's great for them, presumably.
Exactly. I think they're a winner either way, because with borrowing costs where they are, there's one of the few that can really participate and name their terms. And if rates start coming down, I think we'll see a lot of activity out of them.
And Apple, you see value there with their $1 billion or whatever it is users.
Exactly. And, both of these are well-known names. We're not coming up with anything fresh, but we're looking at a market where a lot of stocks are making new highs. And the question is, where can I put money today? Apple clearly disappointing a little bit with their conference last week, sort of being shunned by the market to say they're not leading in AI, and clearly they are not. But that doesn't mean we should count them out in the long run. So again, I think you have a little bit of a valuation opportunity right now to be a long-term investor in Apple. I think that, as we look going forward, they may not be the first, but they still might be a major player and a major beneficiary of their investments for the future.